Hello and welcome to another article video. Now this week's article we're going to look at, as you can find it on the blog page here, why time and price trading is the most powerful edge for traders. Now before we start, I'd like to say that I've made a series of videos on YouTube, and in fact let me show that as well, where I address every problem traders have. Everything, right? Any problem that a trader can possibly have, I've addressed it, and they're all on the YouTube page. So feel free to go over them. I think they'll help you a lot. And in this article as well, we're going to look at the 10 reasons why time and price can really help you out. So let's check out why time and price trading is really powerful, and it can really help us solve all our problems as well. So first of all, now the world of trading. Now, as you can see, we've started with, trading with fundamentals to technicals, and now we're going into quant trading, right? The whole world is about quant trading, algorithms and all that kind of stuff. Some do work, some don't work, and please don't go ahead and buy $30, $29, $100 bots in anticipation of making millions, because I don't think that's going to happen. Okay, bots and quant trading always needs updates as market conditions change. All right, so don't think one thing's going to work all the time, every time, and you will mess up your account. Right, so we've come to that level where the market is really wanting to get rid of all the emotions that's attached to trading, and I've got quant as well, which we've developed one bot, well, two bots actually. But what I really like is to know when the market's going to turn, what day and what hour, and give me a good price. Okay, so those are the three things I like to look at, and this is why I came up with time and price. So what does that give us? Well, first of all, it gives us an advanced forecasting, right? So you don't have to be in front of the screen anticipating, thinking when things are going to happen. If you already calculated the future swing days and the swing hours with a very high probability rate of correctness, like we do all the time, right? You've seen my charts probably here. This is SP 500, right? So you can see that we've got, let me just move this up a little bit as well. You can see all the time that, I've marked these days all in advance, and these are high probability trades, high probability swing days. So if I can see these swing days in advance, then obviously I'm not going to be mucking around trying to trade every day. I'll just say to myself, okay, what's my technical analysis? Where are we at? Okay, if we're at a low, we want to buy. If we're at a high, we want to sell. So are we at levels where we should be doing that? And if so, at what time should I be doing it on that swing day? So knowing the swing hours in advance, the swing days in advance, the hours in advance, some kind of a pricing with my technical analysis is just the best way to trade. And if you don't get a setup, then you don't trade it. You can look at something else. Okay, this is why I do Euro, dollar, gold, SP 500, Dow, NASDAQ, and Bitcoin. But you can do whatever you like, obviously. So knowing these in advance at a high degree of accuracy, it just gets rid of all the stress. You're not checking the markets every day. You're not checking the hours every day, what's going on every day, and so on. You just know when to trade, what day to trade. The other thing is, the second thing is, trade with certainty, not emotion, because by having these calculated in advance, you're kind of like out of all the blurriness about when to trade, and you're going to wait for a price. And even if you wait for a price, is that price really the right price? How are you going to confirm that? What do most retail traders do that institutional traders don't do? Institutional traders will enter the trade if it gets to their price. Okay, that's when they will trade. Retail traders, they'll have a place and they'll want to confirm it. Okay, and time is the best confirmation. If I've got time and price together, correlated, then that is for me bingo. All right, so that's a good place to trade, and that means I've got no emotion, because I understand I've got two variables, time and price. They're high probability, and then if I've got proper money management, I should be in that trade. Okay, so getting rid of emotion and uncertainty is very important, and time and price correlation does that. Third thing is no dependency on news or headlines. A lot of people you will see are trading according to the news, okay, which I don't blame them, because you got to trade with what you have. So what do you have? You got technical analysis and you got news, right? But with time and price, we don't really care about the news. Okay, we don't care about the news. It's not important, and I've written a bunch of articles on this as well, blog posts. We don't need the news. If I was wrong, or if I was like dependent on news, I would not be able to calculate any swing day. This is SP 500, this is gold. I would not be able to calculate any swing day at all if I was dependent on news. What's the point? Then every time some guy makes a I don't know, comment, or something happens in the world, my whole trade's going to turn upside down. You can't trade like that. It's just ridiculous. Okay, so having high probability swing days calculated in advance, you know what you're doing. If you know that Monday is a swing day and Friday was a swing day and we were at the high, Friday we were high, Monday we were at a high, this is gold, so we want to be selling until we get to a target like here, and that's it. So you want to trade with some kind of confidence and some kind of independence, right? I want to be independent from what's going on in the market. You can't follow the news 24/7. It's just not going to work out for you, all right? So this is a beautiful way to keep away from news. You don't need it. The only time I do check the news is if I've got a trading hour around the news, and I can say to myself, okay, this trading hour matches that news. So if it's before the news, I can do a setup. If it's after the news, I could do a retracement setup. Okay, that gives me a setup idea. So I'm still going with the hours and the days, but the news just like, additional information to say, okay, great, so we can trade that. And then I don't have to be afraid of the news either. Now, next one is precision entries and exits. Now you got to do that with not just time but with also pricing, and that's really important. And this is why I also developed the PST indicator, the world's I think first and probably the only, I haven't come across any other indicator as such, that gives us a price. Okay, so for example, this blue dotted line is 49.93, which you don't see obviously at the moment. Okay, it's this one here, 49.93, right? No, you still don't see it. Okay, let's do this. Maybe you can see it. Oh, here we are. All right, so as you can see, right now you can see it. This is that blue dotted line, 49. That's Friday. And it gives me a price, 49.93 is a price of 3,273 up here. Okay, 3,273. And let's see gold. How far did you come down to? Oh, look, 3,273 is here, and that's the lowest the market did. The lowest the market did is on that line, 3,271.62. So we're like, $1 or $2 off. Okay, $2 off. So we're pretty much on top of the game with pricing and timing. So if you also time your trades properly, oh dear me. So now we're here, all right, and let's do this as well. Let's put us back on track here. And then you'll see that your time plus a price, when they match, especially, in fact, on Thursday, I think we had that, didn't we? On Thursday with gold. It was a PST level, there it is, and it was a trading hour in Asia. Okay, 3,250 was on the price there, which is in the green box that I did because that candle was important for us at the right time and price. And see how the market took off all the way back up into the price targets I determined before, and it's a trading hour and they sell again. All right, so hour and price, day, hour, price. So if you get all those right, you are precision trading. Now, why is that important? Because your stop losses are really tight and your risk return is amazingly beautiful. Because if your time and price is wrong, you don't want to be in that trade. You want to cut losses short when you're wrong. And time and price trading really gives you that advantage. You can just get out of the market if you think you're wrong, because time and price is not working out. You're wrong. Just get out. And it's a really small loss. But if you're right, it is huge, especially bouncing off a PST level daily and weekly at the right time. Even if it's not a swing day, take the trade. Okay, and this is how it is. It'll just go up, it'll just come down, and you're like, that's it. So it's really good risk return ratios. Number 5, works across all markets and time frames. Now you can calculate swing days for any asset you want. You can calculate swing hours for any asset you want as well. So they can all be done customizable, because there's a lot of manual work involved in this, the way I do it anyway. And the precision is high with this manual work. I prefer to do it until we hopefully fix our fintech with some financing and get the software done. Once the software done, though, it'll be much easier. And then all you have to do is just calculate it for whatever you're working on. You could be doing, I don't know, any stock. You could be working on any commodity, from oil to wheat to cotton or whatever you want to trade, coffee. You can do anything. All right, you can do anything because you can calculate swing days, hours for any asset, and the pricing model, the PST, it'll work on anything. So that's good to know. 6, reduces overtrading. Now, why are we overtrading? First of all, we're so used to working 9 to 5 or daily jobs, or if you've got your own business, it's even worse, right? Because if you've got your own business, you're not breathing at all. You're like constantly on top of stuff. But the whole idea with this is, if I know the right day, hour, and the prices to trade at, I can't really mess up with overtrading unless I'm nuts. Okay, so if I know the day, hour, time, I'm just going to wait for those specific positions. And then if I don't get them, I don't trade them. If I get them, it's a bingo trade. And if it's a bingo trade, why do I need to trade 10 times for small crumbs? I'll just do one trade and just get the whole thing done in one go with less stress. And more often than not, on those days, hours, and prices, you'll cover your trade quickly. And even if things go bad for you, then all you got to do is get out and you still won't have a loss. I've demonstrated on numerous occasions in videos and also posts. You can also follow my posts on X, GlobalTrader.Club, or Meydan, and you'll see that I've posted them a lot. The trades cover themselves immediately because we've got a tight stop loss and the probability of success is high. So we cover the trade quickly, and then if it goes in our direction, great. If it doesn't, we're still no loss trade or small profit trade. Okay, so that's another thing. 7, confidence to hold winning trades. Now this is really important because you want to cut your losses short, but if you have a winner, why would you get out? But the question is it a winner? Okay, so what's that help you with? Well, how's that going to help you? If you know a swing day, all right, let's take a look at the euro dollar this time. If I know a swing day, if I have a price target, a swing day to a price target, a swing day to the next swing day can be great. Look at this trade, for example. The week before last week, right? So we're on Sunday now. So this is last week, and this is the week before. Look how the market went up. From the swing days, we went all the way to the next swing day up here. So I could have held that trade all week going up, or I could have said to myself, well, because we've got a target up there, why don't I just get in every time there's a retracement? Take profit and get in. Take profit on the retrace. Take profit, wait for the retracement, for the intraday retracement, that is, and then go back in. So every day I could just wait for a retracement, get back in, wait for a retracement, get back in. How do you do that? You do that on a 15-minute chart. When do you do that? Well, you do it at the right time. Let's get back into that last week. So every time the market comes back, if you know Monday, Tuesday is going to be your swing day, you're just going up. So every time the market comes back, okay, like here on a Thursday, it came back, just go back up again into Friday. Okay, and that's your Friday. And then Monday, market makes a high, and then we've got market coming down because Friday and Monday were both swing days. So you got the highs, then you're selling to the low side. Okay, until you get to a price target or it's a swing day again, because the next swing day should also it should also give you a sign that if it's at the right price, they're going to turn around. Okay, so understanding that allows you to keep a trade on. You sync with the natural market rhythm. This is so important. A lot of people miss out on it. When you're trading and you all of a sudden have these swing days, you're like going with the flow of that asset. And if you're trading just one asset, max two, let's say, you really begin to resonate with those assets. Like I resonate with gold a lot because I love trading gold. I trade gold a lot. So then I'm like flowing with its moves up and down and up and down, and knowing the swing days in advance really gives you that opportunity, because you got the swing days and you got your technical analysis. So you kind of think like, okay, you know what, if this is a swing day and we're at a low, we want to buy, we can get there. Okay, so then I can follow it all the way into there, knowing the future swing days as well. So if I've got another swing day coming up in 2-3 days, or at the end of the week, like this Monday and Friday example on the euro dollar, we get them often, then I can say, okay, you know what, I can take this from this low on Monday all the way into Friday. Okay, I'll just follow it through up and up and up until I get to the target, because you've got a target, you got a swing day. All right, so what else could be greater? So understanding that is really important, because you're flowing with the market rather than constantly being in confusion. Back testable, repeatable, scalable. This, it can be done for ages. You can see here, in fact, on the SP 500 thing, I've got a bunch of, this is the Dow, that's the SP 500. You can do this for anything for ages. All right, you see how far I've got it, all the way from like June 2024. I've got them all marked in here. Once I know the swing days and you match it to your technical analysis, you are just going to be cruising. Okay, because you just understand when the market's going to turn. All of a sudden, right, people are talking about crashes. Okay, and they talk about crashes. Look what happened here. Obviously you can't see that there, so I'm going to bring this up here and I'm going to move me there. All right, so look at all this. You see how the market comes into my red lines. I drew this ages ago. These are not trend lines, by the way. But what am I trying to say? No matter what technical analysis method you're using, if you know your swing days, the market comes down here after a big flop. Obviously, you're not going to be selling it like most people did sell. Okay, you're not going to be selling it. You're going to be like, you know, okay, this is a good place to buy. Let's get in. Why? Because it's a swing day. So this week, you're going to be thinking about buying. And look what happened there. This is again like a Monday to Friday kind of thing. Market buys from these levels, goes all the way into those levels, and they sell down. Okay, so all of that is like really good to know in advance. That allows you to check the previous days as well. So if you're looking back and you're thinking, wow, bloody hell, this works 80% of the time. Like I checked out gold on swing days. It was like 80% of the time correct. Euro dollar was 72% of the time correct. Add to that pricing. Okay, this is without the pricing or the swing hours, just the days, right? So just the days alone is 72% on euro dollar and 80% on gold. Add to that the swing hours and the pricing, you're like accuracy rate is like going up because you've got the right variables correlating. Okay? So that's really good. Number 10 is eliminates fear of missing out and chasing a trade. This is really important because a lot of traders, because they don't have the time or the day, they chase a trade, and you don't want to be chasing anything in life. When I first started trading, the first thing I got taught was you wait. Okay, and you can wait a lot if you have to. Okay, that was it. The you wait. So it's always been this, like this, they gave me the crocodile example. It's this crocodile in the water. You know you're not a fast runner, so you're not going to be chasing deers around, okay, in the savannah. The only thing you can do is you wait and you let them come to the water. And that's how I started, and that was like the logical thing to do because you want to wait for an opportunity. But we're in the 21st century and nobody's got the patience to wait. Everybody's like going out to make money. It's like really silly attitude, but that's just how it is. You don't want to be missing out. You don't want to be chasing. Okay, so you want to have the right time and place. I like to call it the right price at the right time. If you're there at the right price at the right time, that's when you trade. This is why knowing the swing hours, the swing days with a price is the best way to trade, because you're not stuck in front of your screen trying to think or figure out when it's going to happen. Okay, you'll have a lot of things on YouTube, all kinds of strategies and methods. Check this indicator, check this hour, check that, check this. It won't work with a high level of accuracy. What works is pre-calculated swing days, swing hours with a price, and that is high probability, and I mean high probability trade. A lot of the best traders in the world settle for 50% or even less success rate, but they've got good money management. So they make it, or they got big funds. If they have a lot of funds, you can wait it out. If you've got a lot of funds, you can cut losses and you can make, money on other trades, and it won't give you a dent in your fund. All right. But, when you're retail trading, it's just not like that. So you better make sure you got the right price at the right time. All right. So don't chase it, and don't have any fear of missing out, because you got the best information on the planet. The high probability day the market's going to turn, the high probability hours, and a good pricing. Okay, so that's the best way to do it. So in conclusion, trade like time is on your side. Time and price, keep them on your side, keep them close. You will be successful. Once again, I urge you to go through those videos. I've done 10 videos, a mini series of every problem traders have and the solutions with time and price. If you're serious about your trading, invest in those videos, invest in your education so you can add to your skill set, because without having an additional skill set in the market, you're just dreaming. It's not going to work out for you. I hope this video helped. Once again, this is the article, Why Time and Price Trading is the Most Powerful Edge for Traders. And you can read the article on GlobalTrader.Club in the blog section here. Okay, that's the article there. Have a good day.